Hey everyone, thank you for joining us today on our real estate wealth building strategies using infinite banking. So I am Brenda Dunville, and I am extremely excited about this topic for so many reasons. One of the main reasons is it's a very expensive world out there, and a lot of people want to have different opportunities. One being the opportunity of having real estate for themselves and for their families. So being your own bank is a really important way to be able to do that. So here's my phone number. Here is my email address. So there's three main things that I do personally. First off, I'm a independent agent, infinite banking expert. I help people with real estate upgrades and life insurance. So let me break that down a little bit. As an independent agent, I can work with over 200 carriers. And so a lot of the times, if people are just looking for something like term insurance, I can help them save about 30 to 50% less on their premiums typically. And as for infinite banking, as we're going to talk about today, or private family banking, it's also called, I help people focus on the wealth creation aspect of life insurance. And it helps create a tax-free cash value accumulation. And so we really focus on that aspect of life insurance for people so that they can get the most out of their money and be able to grow it tax-free, be able to have an opportunity fund to be able to fund something like in real estate or whatever their business ideas are. So third thing, and last but not least, I help people with retirement upgrades. And so if someone was to have a 401k, 403b, IRA, Roth IRA, whatever that looks like for them, I can help them be able to create a zero floor, zero fee, risk free retirement upgrade. And so that removes all hidden retirement threats from their money, helping them remove unnecessary fees and ensuring them income for life guaranteed. So if you are looking at something like that, just reach out and I can show you a little bit more. So, what makes us different than traditional financial advisors? So, I am with a firm called Duval Financial Group, and it is just an amazing group of people with the highest integrity. So, three things that we do different. Principal protection is what I personally love about what we do. We only recommend financial strategies where your principal is protected from losses. They can only grow and never be exposed to losses, such as market volatility, things like that. Legal tax-free growth. We help our clients legally grow their money tax-free whenever possible. Having different buckets of tax-free growth, especially in the economy that we're in, is a really powerful and very smart money play. No unnecessary fees. The solutions that we recommend don't include unnecessary maintenance fees or management fees that chip away at your wealth over time. So everything that we have here is something that you'll be able to do without a fee. So let's talk about infinite banking a little bit. The 13 jobs of infinite banking: one, it provides safety, control, and certainty. Two, accessibility. You have that liquidity with your money. Emergency or opportunity fund that will show you how you can build that. Uninterrupted compound growth. Competitive rates of return. Reduce the interest that you pay. A debt-free weapon. It minimizes tax, it shrinks opportunity costs, and it increases protection. Each dollar does more than one job, which again, I'll show you more about. You get massive peace of mind, and you also get a legacy transfer. So, cash value insurance, again, what we're going to show you more about. Really, some of the powerful plays of that is you get a guarantee, you get complete liquidity on your cash value, you get protection, and you can grow your money tax free, allowing you to be in control of your money. If you have your money sitting in a bank, you have just signed over your money and you are a lender. I don't know if you know that or not, but when you open a bank account, you sign that paper that you're a lender, you're lending your money to the bank. And if you have this set up to where you have infinite banking, you are your own bank, you own your money, you have the control, you have the protection, you have the liquidity. And again, tax-free growth is very, very powerful. Let's talk about cash value and generating cash value, cash flow. So when we think about cash flow, we want to think about the assets that produce cash flow, which could be a business, it could be real estate, which we're going to talk about today. It could be intellectual opportunity. So there's a number of things out there that we could talk about that produce cash flow. But in this case, let's talk about real estate producing cash flow and how to fund your own real estate deal by being your own lender with the overfunded high cash value whole life insurance policy. So here's a little bit how it works. You have money. So you're going to fund your policy, your infinite banking policy, your high cash value whole life policy. All right. And so then you see an opportunity. In this case, we're going to talk about real estate. You see a place that you want to invest in, and you take a loan out on your own cash value. You borrow against your cash value. And so what that does is you can decide, okay, I want to buy that real estate. I want to maybe do some other opportunities if it's something else, that's fine. But at that point, you recapture your money and you repeat the process. And so when you take out a loan, your entire cash value continues to compound, allowing you to make money in two places with the same dollar. And we'll show you more examples of what that looks like with illustrations here in a bit as well. So here's my friend Matt. He was sharing a little bit about his experience with real estate and what that looks like with infinite banking. So let's go ahead and listen to his story here.
Yeah, infinite banking, oftentimes it's called the and asset, because you can have a death benefit for your family, a safe place for your cash to grow, tax advantaged, even tax free, and you can also have real estate with those same dollars. And I'm going to give you a simple numerical example of how you can be protecting your family in one place and still utilize those same dollars to build wealth in another place. Now, the disclaimers are that we would need to see what this looks like exactly for you. I cannot cover all of the details, nor can I cover all the benefits in such a short period of time. These are just general numbers, the variety of factors to consider, the health rating you get, your age, etc., whether you're taking the policies out on yourself or your children or potentially your grandchildren. But here in essence is how it could work. Let's say that over a 7-year period, and if this is designed properly and to your benefit, you would have a goal of hyper funding a life insurance policy for the first 7 years, okay, at a level higher than future years, okay? Well, let's say you had $100,000 that went into a specially designed life policy for the first 7 years, so approximately $15,000 a year, but a total of $100,000. And let's say that purchased approximately $500,000 to $600,000 of death benefit. Okay, so for this concept to work for you, you have to want the death benefit. So when I started this for my own family, there's two things I wanted. I wanted and needed death benefit for my family, but the second thing I needed was a place. I wanted a place to capitalize where I would have multiple uses of the same dollar, and I wanted to capitalize for future real estate projects. I didn't want any more real estate at that time, but I knew that I was going to be purchasing real estate in the future. So $100,000 gets me $500,000 to $600,000 of death benefit. Here's the cool thing. If it's designed right at the conclusion of the 7-year mark, I can now pull that $100,000 out via loan from my policy, from my death benefit, yet I achieved an additional $400,000 to $500,000 of death benefit that's still in place. So I purchased it with my $100,000. That death benefit is in place as I can now take that $100,000 out and use it for real estate. I didn't lose my death benefit. Again, we'll show you how to achieve this. So now with that $100,000, I can achieve approximately $500,000 of real estate, right? Because I put 20% down approximately. That $100,000 allowed me to purchase and control now $500,000 worth of real estate. Simple numbers. Now, if you've made just a decent investment, not even a home run, that real estate should be expected to double over the next 10 or so years. So my $100,000, again, that's working for me with my life insurance policy, it's still got that death benefit for me. I now have it over here. It's purchased me 500,000 of real estate. When it grows to be $1 million of value, that means I've literally created 500,000 of wealth simply by purchasing and holding on to the real estate. Okay, so I've created $500,000 over here, at least, if you've made a good purchase. I've also, now my death benefit has continued to grow. I've created $500,000 on this side. The same dollars are protecting my family on one side, creating wealth in another. So I've created $1 million of protection and wealth / value with my $100,000. Okay, so I live this. You know, I'm nearing the conclusion of my 7th year of being an infinite banker, having a private family bank. We've got out approximately the amount of premium that we've put in out working and creating wealth in real estate projects, cash flow, tax benefits, etc. It's an awesome concept. I was talking to a friend this morning who was saying, you know, most people follow the crowd, the general typical, you know, 401k, IRA, mutual funds, right? That's most people. Some people understand the power and the leverage and the wealth building factor of real estate, but then a smaller group who can learn how to leverage infinite banking with real estate. You've just gone to an elite level of understanding finances, getting multiple uses out of the same dollar, keeping money in motion while at the same time protecting your family. So I hope that this has been beneficial for you. And I would end with this as well. You have to, again, want the death benefit. And do you think over time that taxes and what the tax man might try to grab from estate wealth when you pass, do you think that is going to increase or decrease over time? I think a reasonable person would estimate that taxes are going to increase. The heavy hand grabbing when you pass from potentially your estate wealth or value is probably going to increase. So one reason I love infinite banking and a permanent death benefit is that I love the idea, you know, our real estate that we own, we're passionate about it. Whether it's farmland in Ohio or our property in Uray or Snowmass vacation rentals that we have, we're passionate about those. I want to keep them in the family. And the last thing I would ever want to see is my family have to sell one of our golden geese to pay the tax man. So the fact that there is a tax-free windfall in place in the form of a death benefit for my family, and again, we don't know what the future tax situation or tax code is going to be. Chances are it's going to be higher and of a greater penalty than it is right now. So what am I going to do with that darn death benefit? Said no one ever. There's always a place for a death benefit to go to ease the burden on your family. And in our situation, I hope at a minimum that it protects the golden geese that we've very passionately and carefully assembled. And if my death benefit someday simply helps pay estate taxes so that our family can continue to benefit from and enjoy real estate, that's good with me. And I feel very comforted.
So good. So there's some real life examples. So let's go ahead and look at the numbers. I don't know about you, but I'm a numbers person. I need to see how this works. And so here's a little bit more about the tax-free accounts that you can utilize as infinite banking so that you can utilize for things like real estate opportunity. So this is my friend and colleague, Jesse, and he will show us some examples.
Okay. So what is it? What is a TFRA, a tax-free retirement account? This is a mouthful, but it is super important. All of these words. It is a properly structured, high cash value, overfunded, permanent life insurance product. You're like, life insurance? Yes, life insurance. That is exactly what I said. The average person absolutely does not understand life insurance or really insurance just in general. The insurance part is so important for the tax free access and growth of your money. Think about it. If you get in a car accident and Geico sends you a check, Uncle Sam doesn't tax it. If a storm hits your house and you need to get your roof repaired and State Farm sends you a check, Uncle Sam doesn't tax it. That same tax benefit and protection extends to the arena of life insurance. Now, not all life insurance carriers or products are created equally. In order to do this, you need the right carrier, you need the right product, and you need the right structure. Even within the world of life insurance agents, the vast majority either do not know how to do this or they will not do this. And this is important because just like the traditional money guys, a life insurance agent, in order to do this the right way so that you can see the numbers I'm about to show you in a second, we literally have to cut our commissions by 70%. That is not an exaggeration. Now, I'm not trying to sound like a saint, but our team, I could get into my longer story in a one-on-one meeting of how I wound up in this space, but I specifically got into this space to help families take advantage of these tax advantage plays. Our family, I'd heard about this for several years. Honestly, I was skeptical. And then I finally read a book called What Would the Rockefellers Do? A little over 3 years ago. It all clicked, it all made sense, and we started implementing this play. And I started having some conversations and very quickly realized that almost everybody I knew, when I would talk to them, they knew that there had to be something more out there than just simply work for your employer and have a 401k. Side note, having a 401k again can be a great thing. Most people have some form of qualified funds sitting out there with a former employer, right? Most people have worked more than one job and they go from one job to the next, and you have old 401k money out there. Those funds need to stay inside of a qualified retirement plan if you want to avoid the early withdrawal penalties and tax consequences. There's a whole separate play from this that we refer to as a zero floor, zero fee account. You can upgrade old 401ks in a completely different way. It cannot be rolled directly into a tax-free retirement account, just to be very clear. Like, full transparency, I've been a full-time entrepreneur since 2007. I don't have any money in qualified retirement plans, although I help many folks upgrade their accounts, again, remove unnecessary fees and exposure to losses. But for these properly structured high cash value policies, this is where our family builds wealth, because not only is it tax-free growth and access, but it's also liquid. I'm only 41 at the time of this recording. I have many other things and priorities I want to do. I don't want to sit around and wait till I turn 60 to be able to touch my money. So we're going to look at two real life scenarios. Okay. So first, we're going to meet Jane. She's a 29-year-old female. So we're going to look at both ends of the spectrum. You might be seeing this and saying, well, I'm not a 29-year-old female. That's okay. You can be male, you can be older, and this still works. We'll look at that in a second. But first, the reality is the younger you are when you start this, just the better it gets. Why? Because you have more time on your side for uninterrupted compounding. And so I want to show you what can happen. Jane, she's just going to put a modest $600 a month aside. This can be done with a lower contribution. I've helped people set these up for $100 a month. Okay. It can be done with lower numbers, but I just want to show you what would happen if Jane starts putting $600 a month into this through the age of 65. So you'll see here on the left-hand side there, that shows $7,200 per year, right? $600 times 12, that's the $7,200 per year. And I want you to see this very first distinction again. The younger you are, the better this gets, but it's not just because of the growth. So again, unlike a qualified retirement plan where if Jane starts putting money in that, she's not going to be able to touch it till she's 59 and a half, right? Check out now what she has access to. In that first year, she has access to more than $4,600 of cash value. And if, God forbid, Jane were to pass early, her beneficiaries would have a $285,000 death benefit. That would not happen with a 401k, IRA, etc. I'm not saying those are bad things, but I'm trying to help you understand the advantages here with it. Now, she's going to do that every year through the age of 65. Let's fast forward now to retirement. and see what that looks like for Jane. So you'll see now that she's no longer, you see all those zeros in that column on the left, she's no longer paying premiums into this. But look over here on the right, she now has well over $650,000 of cash value. By the way, you have to understand this. When you're using these A-rated uh, whole life insurance carriers, mutual insurance carriers, the reality is they have an incredible track record. You don't have the exposure to losses. You see growth, 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 growth consistently. Like we look at a super extreme example of the Great Depression. Do you know that 90% of the stock market was wiped out then? I'm not trying to doom and gloom. I'm not trying to fear, you know, cause fear and sensationalize or anything like that. What I'm trying to do is show you by example, though, is 40% of banks closed, 90% of the stock market was wiped out. It took 28 years for your money to recover if you had money in the market at the start of the Great Depression. And every A-rated mutual life insurance carrier, they pay dividends and profits to their policyholders year after year after year like that. So you'll see not only does she have well over 650,000 tax-free, but she also has a $1.2 million death benefit. And check this now. She is 65 or 66 now, no longer paying a life insurance premium, but has $1.2 million of death benefit tax-free locked in. This is super powerful. And while it doesn't show this on this page, I ran the numbers. She can access more than $30,000 per year tax-free all the way through age 65 past age 100 with no fear of that money running out. And let's just say that she wound up having other retirement sources and never even wound up accessing this money and just let it sit and grow. If she only put $259,000 into it, and you would see with an average life expectancy of 90 years old, she would have almost $2.5 million tax-free that would wind up passing to her children, grandchildren, great-grandchildren, etc. You have to think beyond the day-to-day, the week-to-week, the month-to-month. When you start thinking decade to decade, generation to generation, this becomes even more powerful. But again, let's just say for argument's sake, she never did any of that. Like I said, $600 a month, starting at age 66, she can withdraw over $30,000 a year tax-free the rest of her life. Remember how we talked about old school retirement plans that were pensions, right? Defined benefits, guaranteed incomes. That's what you can create for yourself with all the tax advantages on it as well. So let's say you're not a 29-year-old female. What if you're a man in your 50s? Okay. And the reality is, if you might have to do some catch up. Maybe you haven't done a lot of retirement planning yet. So we're going to show you what 50-year-old Frank can do here. Is he starts putting about 50 grand a year in annually, starting at age 51. Okay. And that's about $4,000 a month. Now again, we have clients that do 10 times this, literally 10 times this. And again, we have clients who do $100 or $200 a month. You can do this at any income range. Okay. But we're just showing, hey, Frank, he hasn't really planned for retirement, but he has some disposable income and he wants to start supercharging his tax-free retirement account. So you see that $50,000 per year goes in. He's going to do this from age 50 through age 70. So for 20 years. Okay. Now, again, notice in that first year, he has $29,000 of liquid cash and almost $1 million of death benefit starting out the gates with this, where again, if God forbid something happened, this is going to work out way better for him than just throwing it into a market-based IRA, okay? But now let's fast forward to age 70, and you'll see he's no longer paying into his policy. So he did $50,000 for 20 years. That's $1 million that he put into it. And now you'll see that he's got over 1.5 million tax-free cash sitting there. This is super important. If he wanted to start accessing over $100,000 per year tax-free, his money would last him past age 100 in this example here. And again, there's a huge death benefit there that happens. What if he wound up, doing well in other areas? He might have close to a $5 million death benefit. And what's really great about this is you have to understand is any cash value access while you're alive, that just deducts out of the death benefit amount. So you see down there, he's got that $4.993 million death benefit at age 90. Well, if he had access to $2 million of cash value, that would just deduct out. So in this example, he could say he pulled $2 million out. He put $1 million in. He pulled $2 million out tax-free to enjoy for his retirement and left an additional $3 million in that scenario to his beneficiaries. This is a way to, again, remember that word I shared earlier about efficiency? This is a way that is totally legal, that has been done for well over 100 years in our country by many of the ultra wealthy, And you and I can do it and can access it, can embrace this and leverage it for our families. My family's been doing this for 3 years now personally, and we have helped hundreds of clients do that over the past 3 years also. But what's awesome is it's individualized. There's so much strategy that you can bring to this. And the more you grow and learn, the more empowered you are to use and implement this.
All right. So as you saw where the cash value was, that's where you can take a loan out on yourself and you can utilize it for real estate, since that's the topic we're talking about today. And, as that produces income, maybe you or Airbnb or whatever, a rental unit, whatever. Whatever comes back into that, you can always put back into your infinite banking and grow it even more. So, what opportunity does this give you if set up correctly, which is what we do here? You get unlimited creativity and flexibility. You have access to your money tax free with full liquidity. You grow tax free wealth, 4.5 to 5.5% tax free growth for life, and a growing death benefit for life as well. So 90% of whole life policies are not set up correctly, unfortunately, for infinite banking and tax-free growth. So if you guys have a whole life policy and you want us to check it out for you, I have done that for people quite often. And sometimes we need to correct things or replace things and get it to where you guys can have an opportunity to have this as infinite banking. Some just with some adjustments. So the government doesn't like us growing our money tax free, obviously. So they do have requirements to keep it non taxable. And again, this is how we will be able to help you get it structured properly. So one is called the MEC level, the modified endowment contract. If you don't have your policy set up correctly, they will see it as an investment, not as life insurance. So we like to make sure that you have the death benefit the correct level and your cash value as high as possible so that you can have the best growth with your money and keep it tax free. Second thing, it's called reduced paid up. So the government made a number to where you have to have a minimum years of your premium paid for a minimum of 7 years. So you can do more, but it has to be a minimum of 7 years to be able to be set up correctly. So 3 variables that I want you guys to think about. One, how much do you want to pay in premiums? 2, how long can you pay premiums for? 3, do you want to have an initial premium, which is like a supercharge where you can have a dump in at the beginning stages of your policy? So where do we go from here? That was a lot of knowledge. So the first thing is I encourage you to write down your questions. Write down your statements, write down your feedback, write down your thoughts, and we're going to schedule a time to meet. So all consultants are free of charge, and we focus on education. Okay, so when we have a Zoom meeting, it's going to be to be able to answer your questions and be able to grow your financial IQ. So we customize your personal plan, and no two accounts are the same. Every client has their own unique needs and circumstances. So we will talk about that and personalize it for you and your family. And the next step after that is we will help you get approved. If this is something that you would like to do after being approved, we will be able to help you get it set up, and you'll be able to fund your infinite banking policy, utilizing it for whatever opportunity that you want with that cash value. In this circumstance, we're talking about real estate. So fund your future. So funding your new tax-free retirement account. So, like I said, you will most likely have questions. Again, encouraging you to write them down. So, the next step will be schedule your private confidential online appointment with me so that we can go over options that will best suit you personally for your wants, your needs, your personal financial assets for you and your family, and for your future business. I am looking forward to helping serve you and your family with all of your safe money plays and helping you educate further and getting this set up correctly for you so that we are ready to grow your tax-free cash value for you and your entire family. So here's my phone number. You'll see underlined there at 360-632-0078, or my email, brendadunville@gmail.com. You can text me your full name so I know it's you, and what interests and what you want to learn more about, and we can schedule that appointment and go over that for you. So you guys, thank you so much for joining me today. I know you're going to have a ton of questions. I'm looking forward to walking through this with you. So we do have something coming up next. So next week, same time, same place, we will have a, um, a masterclass about the zero floor, zero fee, risk-free retirement upgrades, which I know you did hear about on this masterclass, talking about 401ks, old past 401ks, 403bs, IRAs, Roth IRAs, all that kind of thing. You can protect them. You can remove hidden retirement threats. You can remove unnecessary fees and all of the market volatility and all that things that you may just want to get off that emotional roller coaster and protect your money, watching it go up with the market and never down with the market. It's a beautiful thing. So if you guys are curious about that, or you know somebody that's curious about that, it doesn't matter what age you are. Maybe, you're 30, 40 years old, you're not ready to retire, but you want to prepare and you want to make sure that your money's protected. I encourage you to join. If you guys are of retirement age, definitely join us. And if you guys are already retired, this is for you as well. It's for everyone. So you guys, thank you so much for joining today. God bless you guys. Have an amazing day. And we will see you next Saturday. I'm looking forward to getting all your texts with your questions and setting up appointments. Have an amazing day. God bless.